Italy, a nation renowned for its rich cultural heritage and historical significance, now faces formidable economic challenges that could reshape its future and impact the broader European landscape. As of 2024, Italy's public debt has escalated to approximately 141.4% of its GDP, positioning it among the highest debt ratios globally. The economy is projected to grow by a modest 0.7% this year, reflecting a slowdown influenced by a struggling industrial sector and external economic pressures. Compounding these issues is an aging population, with a significant portion of the workforce approaching retirement, leading to a shrinking labor pool and increased strain on social services. Additionally, Italy's industrial sector is experiencing a downturn, with challenges in competitiveness and productivity hindering economic growth. These converging factors have resulted in a complex economic landscape, with the government striving to balance fiscal discipline and economic support. The implications of Italy's economic situation extend beyond its borders, serving as a critical case study for other advanced economies facing similar demographic and industrial challenges. Before we delve deeper into this pressing issue, please like, share, and subscribe to Economy Explorer. Your support enables us to continue providing insightful analyses on global economic trends. Italy's key economic challenges. Italy's economy is buckling under the weight of a staggering public debt, now at 141.4% of GDP, far exceeding the EU's recommended limit of 60%. This financial burden hampers investments and essential programs, while rising interest rates make repayments increasingly costly. The government faces a tough dilemma: reduce spending and risk stifling growth, or borrow more and risk fiscal collapse. As borrowing costs climb, Italy's debt crisis casts a shadow not just on its own future, but on the stability of the European Union as well. Adding to these challenges is Italy's aging population. With nearly 24% of Italians over 65 and one of Europe's lowest birth rates, the workforce is shrinking, threatening productivity and innovation. The situation worsens with a brain drain, as talented graduates leave for higher wages abroad, draining the country of its intellectual capital. This exodus leaves Italy struggling to compete globally, raising the question: can it retain its talent before the economic consequences become irreversible? Once a manufacturing powerhouse, Italy's industries now lag behind due to fragmentation and slow adoption of technology. The average Italian business employs just 3.6 workers compared to 15 in Western Europe, resulting in inefficiencies and lower productivity. While competitors in Germany thrive with automation and scale, many Italian firms rely on outdated methods, undermining their global competitiveness. Without innovation, the country risks being left behind in the race for economic modernization. Beneath the surface lies another hidden challenge: the shadow economy. The black market, which once contributed a staggering 25% to GDP, still accounts for around 12% today. Rooted in distrust of the government and high tax burdens, this informal economy deprives Italy of billions in revenue while perpetuating a cycle of weak public services and further evasion. Breaking free from this cycle is critical, but it remains a daunting task. Another pressing issue is Italy's deep regional divide between the prosperous north and the struggling south. While cities like Milan thrive as financial and industrial hubs, southern regions like Calabria face poverty rates that rival developing nations. This disparity not only weakens national productivity, but also highlights a fragmented economy that struggles to function as a cohesive whole. Bridging this gap is essential to lifting the nation out of its economic woes. The post-war miracle: a phoenix from the ashes. In the aftermath of World War II, Italy lay in ruins, its cities bombed, infrastructure decimated, and economy crippled. Yet, within a few decades, it emerged as one of the fastest-growing economies in Europe. The catalyst? The Marshall Plan, which funneled billions of US dollars into rebuilding war-torn Europe, provided Italy with the resources to revitalize its industries. Factories that once churned out wartime supplies were retooled to produce consumer goods, and Italy embraced industrialization with fervor. During the 1950s and 1960s, Italy experienced what is now known as the Italian economic miracle. Annual growth rates averaged over 5%, fueled by exports, industrial output, and an insatiable global demand for made-in-Italy goods. Think sleek Vespa scooters, luxury textiles, and iconic Italian design. By 1963, Italy had become the sixth-largest economy in the world. But beneath this glittering success lay the seeds of future stagnation. Over-reliance on debt-funded growth and limited investment in sustainable practices set the stage for the challenges we see today. Cycles of boom and stagnation, a repeating pattern. Italy's post-war growth wasn't permanent. By the mid-1970s, cracks began to show. The country entered its first significant period of stagnation, marked by rising inflation, unemployment, and a national debt crisis. A dependence on public spending and inefficient industries created a fragile economic base. Yet, as history would show, Italy has a way of rebounding. In the 1980s, reforms such as granting independence to the central bank and cutting inflation helped restore confidence. Italy shifted its focus to exporting high-value goods, luxury cars, fashion, and fine foods, and soon became one of the fastest-growing economies again. However, with growth came new challenges: overborrowing, tax evasion, and weak regulation. These recurring problems have become a hallmark of Italy's economic story, a pattern of rapid growth followed by stagnation, each cycle eroding long-term stability. What caused this cycle to persist? A fragmented political landscape, a reliance on small-scale enterprises, and a reluctance to embrace large-scale structural reforms. While Italy achieved temporary growth, it never fully addressed the underlying inefficiencies that would later weigh down its economy. The adoption of the euro, a double-edged sword. When Italy joined the Eurozone in 1999, it marked a turning point for the nation's economy. On one hand, adopting the euro eliminated exchange rate volatility and made Italian goods more accessible to foreign buyers. Foreign investment poured in, and Italy saw a short-lived resurgence in growth. However, the transition came at a cost. To meet the Eurozone's strict fiscal requirements, Italy had to curb public spending and reduce its towering debt, forcing painful austerity measures. These policies slowed economic growth, exacerbated unemployment, and widened regional disparities. Moreover, losing control over monetary policy meant Italy could no longer devalue its currency to boost exports, a strategy it had used successfully for decades. The euro brought opportunities, but it also exposed Italy's vulnerabilities, leaving the country ill-equipped to weather future crises. The Great Recession and the Long Decline. The 2008 global financial crisis dealt a devastating blow to Italy. As demand for exports plummeted and credit tightened, the country slipped into its longest period of stagnation yet. Over the past 15 years, Italy's economy has contracted by nearly 20%, while unemployment and public debt have soared. Small businesses, Italy's economic backbone, struggled to adapt to a rapidly changing global economy, and many closed their doors for good. Unlike its neighbors, Italy failed to fully recover from the crisis. Structural issues, such as an aging workforce and low productivity, compounded the problem. Meanwhile, other European nations surged ahead, leaving Italy stuck in a cycle of high debt, low growth, and increasing inequality. Looking back to move forward. The threads of Italy's economic story are intertwined, each period of growth and decline linked to decisions made decades before. From the Marshall Plan to the Eurozone crisis, every turning point has shaped the challenges the country faces today. Italy's history offers valuable lessons for economies around the world, but it also raises an important question. Can Italy break free from its cycles and chart a new course? Stay tuned as we explore the potential solutions in the next section. Present-day impact: how Italy's economy shapes lives today. In a small village in southern Italy, a local baker closes her family-run business after 30 years. Rising energy costs, stagnating wages, and dwindling customers have made survival impossible. Stories like hers are becoming alarmingly common as the economic ripple effects of Italy's struggles touch every corner of the country. With GDP growth projected at just 0.7% in 2024, Italy faces a harsh reality. Its economy is stagnating, while its citizens bear the brunt. Unemployment remains a pressing issue, especially for young Italians. Youth unemployment hovers around 23%, one of the highest rates in Europe. Graduates with promising futures often find their potential unrealized in Italy, pushing many to leave for better opportunities abroad. This brain drain not only robs the country of its brightest minds, but also exacerbates an aging population's strain on public resources. While Germany and France attract these workers, Italy struggles to provide the competitive wages and career paths needed to keep them home. The south of Italy tells an even bleaker story. Poverty rates in regions like Calabria and Sicily exceed 30%, creating a stark contrast with the north, where cities like Milan flourish. This regional divide undermines national productivity and fuels discontent as southern Italians feel left behind by policies that seem tailored to wealthier northern areas. Infrastructure remains a glaring issue, with underdeveloped transport and utilities making southern businesses less competitive and deepening the divide. Meanwhile, the cost of living has soared, particularly in urban centers. Energy prices have hit households hard, and inflation has eroded purchasing power, leaving many families struggling to afford basics. For those on fixed incomes, especially retirees, the situation is dire. And while public programs like pensions are a lifeline, the system's sustainability is increasingly questioned as Italy's debt climbs. Italy's small businesses, which account for 99% of the country's enterprises, are also struggling. With limited access to capital and rising costs, these businesses often lack the resources to modernize or expand. Many operate in traditional industries that fail to compete in an increasingly digital global market. How can these companies adapt when they're stuck in survival mode? The informal economy adds yet another layer to this complex puzzle. Many Italians turn to unregistered work to make ends meet, but this deprives the government of crucial tax revenue. This vicious cycle perpetuates weak public services, leaving citizens frustrated and further fueling distrust in the system. Can Italy turn the tide? Picture a bustling Italian piazza, a symbol of community and commerce, now quieter as businesses shutter and youth leave for distant shores. This image encapsulates the challenge Italy faces today, a nation rich in history, culture, and potential, yet weighed down by economic stagnation. The question is no longer what happened, but rather what comes next. Italy stands at a crossroads. On one side, the rising costs of debt, a shrinking workforce, and lagging industries threaten to deepen the nation's struggles. On the other, there lies an opportunity for transformative change. Strategic investment in technology, sustainable reforms, and a renewed focus on unifying the North and South could redefine its trajectory. The global demand for high-quality Italian products remains strong. What if that strength could be harnessed to create a new wave of industrial innovation? The stakes extend far beyond Italy's borders. As a cornerstone of the European Union, Italy's success or failure has ripple effects across the continent. A revitalized Italy could energize the EU, while continued stagnation might unsettle its stability. This is not just Italy's story, it's a chapter in the narrative of advanced economies struggling to adapt to modern challenges. So, what role will Italy's government, businesses, and citizens play in shaping this future? And what lessons can the world learn from Italy's journey so far? The answers lie in the choices made today, ones that will echo for generations to come. Thank you for exploring this with us. Don't forget to like, share, and subscribe to Economy Explorer, and check out one of the suggested videos on the screen to continue your journey into the world of global economics. We're grateful to have you as part of our channel. Arrivederci.